Look at the pitching tables used by 36 financial technology companies to raise millions of dollars. Fintech funding has been on a tear. In 2021, fintech funding hit a record $132 billion globally, according to CB Insights, more than double 2020's mark. Insider has been tracking the next wave of hot new startups that are blending finance and tech. Check out these pitch decks to see how fintech founders are selling their vision and nabbing big bucks in the process. You'll see new financial tech geared at freelancers, fresh twists on digital banking, and innovation aimed at streamlining customer onboarding. About a decade ago, politician Stacey Abrams and entrepreneur Laura Hodgson were forced to fold their startup because of a kink in the supply chain, but not in the traditional sense. Nourish, which made spill-proof bottled water for children, had grown quickly from selling to small retailers to national ones. And while that may sound like a feather in the small business cap, there was a hang-up. It was taking longer and longer to get paid. And as you can imagine, you deliver the product and then you wait and you wait. But meanwhile you have to pay your employees and you have to pay your vendors. Hodgson told Insider, waiting to get paid was constraining our ability to grow. While it's not unusual for small businesses to grapple with working capital issues, the dust was still settling from the Great Recession. Abrams and Hodgson couldn't secure a line of credit or use financing tools like factoring to solve their problem. The two entrepreneurs were forced to close Nourish in 2012, but along the way they recognized a disconnect in the system. Why are we the ones borrowing money, when in fact we're the lender here? Because every time you send an invoice to a customer, you've essentially extended a free loan to that customer by letting them pay later. Hodgson said, and the only reason why we were going to need to possibly borrow money was because we had just given ours away for free to Whole Foods. She added, fintechs looking to transform how insurance policies are underwritten, issued, and experienced by customers have grown as new technology driven by digital trends and artificial intelligence shape the market. And while verticals like auto, homeowners, and renters insurance have seen their fair share of innovation from forward-thinking fintechs, one company has taken on the massive life insurance market. Founded in 2017, Ladder uses a tech-driven approach to offer life insurance with a digital end-to-end service that it says is more flexible, faster, and cost-effective than incumbent players. Life, annuity, and accident and health insurance within this comprise a big chunk of the broader market. In 2020, premiums written on those policies totaled some $767 billion. Compared to $144 billion for auto policies and $97 billion for homeowners insurance. Branded cards have long been a way for merchants with appropriate bank relationships to create additional revenue and build customer loyalty. The rise of embedded payments, or the ability to shop and pay in a seamless experience within a single app, has broadened the number of companies looking to launch branded cards. Highnote is a startup that helps small to mid-sized merchants roll out their own debit and prepaid digital cards. The fintech emerged from stealth on Tuesday to announce it raised $54 million in seed and Series A funding. An alternative auto lender that caters to thin and no-credit Hispanic borrowers is planning a national expansion after scoring a $90 million investment from BlackRock-managed fund. Tricolor is a Dallas-based auto lender that is a community development financial institution. It uses a proprietary artificial intelligence engine that decisions each customer based on more than 100 data points, such as proof of income. Half of Tricolor's customers have a FICO score, and less than 12% have scores above 650. Yet the average customer has lived in this for 15 years. According to the deck, a 2017 survey by the Federal Deposit Insurance Corporation found 31.5% of Hispanic households had no mainstream credit compared to 14.4% of white households. For decades, the deck has been stacked against low-income or credit-invisible Hispanics in the United States when it comes to the purchase and financing of a used vehicle. Daniel Chu, founder and CEO of Tricolor, said in a statement announcing the raise, Christy Kim knows firsthand the challenge of obtaining credit in this without an established credit history. Kim, who came to this from South Korea, couldn't initially get access to credit despite having a job in investment banking after graduating college. I was in my early 20s. I had a good income. My job was in investment banking, but I could not get approved for anything, Kim told Insider. Many young professionals like me. We deserve an opportunity to be considered, but just because we didn't have a FICO, we weren't given a chance to even apply. She added. Kim started Tom Credit in 2018 to help others like herself gain access to consumer credit. Tom Credit spent 3 years building an internal algorithm to underwrite customers based on cash flow rather than a credit score. Fintech startup Rocket Dollar, which helps users invest their individual retirement account dollars into alternative assets, just raised $8 million for its Series A round. The company announced on Thursday. Park West Asset Management led the round, with participation from investors including Hyphen Capital, which focuses on backing Asian American entrepreneurs, and crypto exchange Kraken's venture arm, co-founded in 2018 by CEO Henry Yoshida, CTO Rick Dude, and VP of Marketing Thomas Young. Rocket Dollar now has over $350 million in assets under management on its platform. Yoshida sold his first startup, a robo-advisor called Honest Dollar, to Goldman Sachs Investment Management Division for an estimated $20 million. Yoshida told Insider that while ultra-high net worth investors have been investing self-directed retirement account dollars into alternative assets like real estate, private equity, and cryptocurrency, average investors have not historically been able to access the same opportunities to invest IRA dollars in alternative assets through traditional platforms. Blair Silverberg is no stranger to fundraising. For 6 years, Silverberg was a venture capitalist at Draper Fisher Jr. Vet's son in private credit investments, making bets on startups. I was meeting with thousands of founders in person each year, watching them one at a time go through this friction where they're meeting a ton of investors, and the investors are all asking the same questions. Silverberg told Insider. He switched gears about 3 years ago, moving to the opposite side of the metaphorical table, to Stardom Capital, which uses artificial intelligence to match investors with startups looking to fund raise. On August 31st, the New York-based fintech announced its $9 million Series A. The round was led by Future Ventures with participation from Web Investment Network, Wavemaker Partners, and Part-CH. 3 years ago, Patricia Montesi realized there was a disconnect in the payments world. A lot of new economy companies or fintech companies were looking to mesh up a lot of payment modalities that they weren't able to. Montesi, CEO and co-founder of QOLO, told Insider. Integrating various payment capabilities often meant tapping several different providers that had specialization as in one product or service. She added, like debit card issuance or cross-border payments. The way people were getting around that was that they were creating the spider web of tech, she said, adding that at the end of it all, they had this mess of suppliers and integrations and bank accounts. The 20-year payments veteran rounded up a group of 3 other co-founders who together had more than a century of combined industry experience to start QOLO, a business-to-business fintech that sought out to bundle back-end payment rails for other fintechs. The way people work has fundamentally changed over the past year, with more flexibility and many workers opting to freelance to maintain their work-from-home lifestyles. But managing a freelance or contractor workforce is often an administrative headache for employers. Workzone is a startup looking to eliminate all the extra work required for employers to adapt to more flexible working norms. Workzone started as a freelancer marketplace automating the process of matching qualified workers with the right jobs. But the team ultimately pivoted to a full suite of workforce management software, automating administrative burdens required to hire, pay, and account for contract workers. In May, Workzone closed a $13 million Series A backed by European angel investor Tommy Ahlers and Danish firm Lynn-Risk03R. The COVID-19 pandemic has underscored the growing preference of mobile banking, as customers get comfortable managing their finances online. The financial app Albert has seen a similar jump in activity, currently counting more than 6 million members. Deposits in Albert's savings offering doubled from the start of the pandemic in March 2020 to May of this year, from $350 million to $700 million, according to new numbers released by the company. Founded in 2015, Albert offers automated budgeting and savings tools alongside guided investment portfolios. It's looked to differentiate itself through personalized features, like the ability for customers to text human financial experts. Budgeting and saving features are free on Albert. But for more tailored financial advice, Customers pay a subscription fee, that's a pay-what-you-can model, between $4 and $14 a month. And Albert's now banking on a new tool to bring together its investing, savings, and budgeting tools. For lenders, debt collection is largely automated, but for people who owe money on their credit cards, it can be a confusing and stressful process. Relief is looking to change that. Its app automates the credit card debt collection process for users, negotiating with lenders and collectors to settle outstanding balances on their behalf. The fintech just launched and closed a $2 million seed round led by Collaborative Ventures. Relief's fundraising experience was a bit different to most. Its pitch deck, which it shared with one investor via Google Slides, went viral. It set out to raise a $1 million seed round, but ended up doubling that and giving some investors money back to make room for others. Securitize, founded in 2017 by the tech industry veterans Carlos Domingo and Jamie Finn, is bringing blockchain technology to private markets investing. The company raised $48 million in Series B funding on June 21 from investors including Morgan Stanley and Blockchain Capital. Securitize helps companies crowdfund capital from individual and institutional investors by issuing their shares in the form of blockchain tokens that allow for more efficient settlement, record keeping, and compliance processes. Morgan Stanley's Tactical Value Fund, which invests in private companies, made its first blockchain technology investment when it called the Series B. Securitize CEO Carlos Domingo told Insider, "Business banking is a hot market in fintech, and it seems investors can't get enough." Novo, the digital banking fintech aimed at small e-commerce businesses, raised a $40.7 million Series A led by Vala Ventures in June. Since its launch in 2018, Novo has signed up 100,000 small businesses. Beyond bank accounts, it offers expense management, a corporate card, and integrates with e-commerce infrastructure players like Shopify, Stripe, and Wise. Founded in 2018, Novo was based in New York City, but has since moved its headquarters to Miami. A blockchain-based fintech startup that is aiming to disrupt the traditional model of evaluating people's creditworthiness recently raised $30 million in a Series B funding led by Ready-T reporting giant TransUnion. 4-year-old Spring Labs aims to create a private, secure data sharing model to help credit agencies better predict the creditworthiness of people who are not in the traditional credit bureau system. The founding team of 3 fintech veterans met as early employees of lending startup Avant. Existing investors Great Point Ventures and August Capital also joined in on the most recent round. So far, Spring Labs has raised $53 million from institutional rounds. Transunion, a publicly traded company with a $20 billion plus market cap, is one of the 3 largest consumer credit agencies in this. After 18 months of dialogue and 6 months of due diligence, Transamerica and Spring Labs inked a deal. Spring Labs CEO and co-founder Adam J. Ewan told Insider, "Lance is a new digital bank hoping to simplify the life of those workers by offering what it calls an active approach to business banking. We found that every time we sat down with the existing tools and resources of our accountants, and QuickBooks and spreadsheets, we just ended up getting tangled up in the whole experience of it." Lance co-founder and CEO Unaro Kaita told Insider, "Lance offers sub-accounts for personal salaries, withholding and savings to which freelancers can automatically allocate funds according to custom preset levels. It also offers an expense balance that's connected to automated tax withholding. In May, Lance announced the closing of a $2.8 million seed round that saw participation from Barclays, BDMI, Great Oaks Capital, Imagination Capital, Techstars, DFJ Frontier, and others. Jason Wang started his career at Morgan Stanley in investment research over 20 years ago. Now, he's running a company that is hoping to broaden access to financial advice for less wealthy individuals. The startup raised $50 million in Series B funding led by Insight Partners with participation from investors Vanguard and Venrock. The round brings the Los Angeles-based startup's total funding to just under $67 million. Founded in 2018, Altruist is a digital brokerage built for independent financial advisors, intended to be an all-in-one platform that unites custodial functions, portfolio accounting, and a client-facing portal. It allows advisors to open accounts, invest, build models, report, trade, and bill clients through an interface that can advisors' time by eliminating mundane operational tasks. Altruist aims to make personalized financial advice less expensive, more efficient, and more inclusive through the platform, which is designed for registered investment advisors, a growing segment of the wealth management industry. While countless small businesses have been harmed by the pandemic, self-employment and entrepreneurship have found ways to blossom as Americans started new ventures. Half of this population may be freelance by 2027, according to a study commissioned by remote work hiring platform Upwork. Honeybook, a fintech startup that provides payment and operations support for freelancers, in May raised $155 million in funding and achieved unicorn status, with its $1 billion plus valuation. Durable Capital Partners led the Series D funding with other new investors including renowned hedge fund Tiger Global, Battery Ventures, ZEEV Ventures, and 01 Advisors. Citi Ventures, Citigroup's startup investment arm that also backs fintech robo-advisor Betterment, participated as an existing investor in the round alongside Norwest Venture Partners. The latest round brings the company's fundraising total to $227 million to date. Onboarding new customers with ease is key for any financial institution or retailer. The more friction you add, the more likely consumers are to abandon the entire process. But preventing fraud is also a priority, and that's where Neuroid comes in. The startup analyzes what it calls digital body language, or the way users scroll, type, and tap. Using that data, Neuroid can identify fraudulent users before they create an account. It's built for banks, lenders, insurers, and e-commerce players. The train has left the station for digital transformation. But there's a massive opportunity to try to replicate all those communications that we used to have when we did business in person. All those tells that we would get verbally and non-verbally on whether or not someone was trustworthy. Neuroid CEO Jack Alton told Insider. Founded in 2014, the startup's pitch is twofold. Neuroid can save companies money by identifying fraud early, and help increase user conversion by making the onboarding process more seamless. In December, Neuroid closed a $7 million Series A, co-led by FinVC and TTV Capital, with participation from Canopy Ventures. With 30 employees, Neuroid is using the fresh funding to grow its team and create additional tools to be more self-serving for customers. Marketplaces like Amazon and eBay host millions of third-party sellers, and their algorithms will often boost items in search based on consumer sentiment, which is largely based on reviews. But many third-party sellers use fake reviews often bought from click farms to boost their items, some of which are counterfeit or misrepresented to consumers. That's where FakeSpot comes in. With its Chrome extension, it warns users of sellers using potentially fake reviews to boost sales and can identify fraudulent sellers. FakeSpot is currently compatible with Amazon, Best Buy, eBay, Sephora, Steam, and Walmart. There are promotional reviews written by humans and bot-generated reviews written by robots or review farms. FakeSpot founder and CEO Saud Khalifa H. told Insider. Our AI system has been built to detect both categories with very high accuracy. FakeSpot's AI learns via reviews data available on marketplace websites, and uses natural language processing to identify if reviews are genuine. FakeSpot also looks at things like whether the number of positive reviews are plausible, given how long a seller has been active. Consumers are getting used to the idea of branchless banking, a trend that startup digital-only banks like Chime, N26, and Vero have benefited from. The majority of these fintechs target those who are underbanked and rely on usage of their debit cards to make money off interchange. But fellow startup HMBRADLEY has a different business model. Our thesis going in was that we don't swipe our debit cards all that often, and we don't think the customer base that we're focusing on does either. Zach B. Runk, co-founder and CEO of HMBRADLEY, told Insider. A lot of our customer base uses credit cards on a daily basis. Instead, the startup is aiming to build clientele with stable deposits. As a result, the bank is offering interest rate tiers depending on how much a customer saves of their direct deposit. Notably, the rate tiers are dependent on the percentage of savings, not the net amount. We'll pay you more when you save more of what comes in, B. Runk said. We didn't want to segment customers by how much money they had. So it was always going to be about a percentage of income. That was really important to us.